is
Yeah.
indirectly getting exposure to Bitcoin. Coinbase is acting as a custodian for them, but essentially they are allocating crypto Bitcoin to a certain percentage in the portfolio of their clients, right? But a lot of banks in other countries, they're saying, no, you can't even buy Bitcoin. And I think this is a violation of your like basic rights that as a person, I want to have a diversified portfolio. I see Bitcoin crypto as a legitimate digital asset that I want to own, but banks won't let me do that. And you don't have a choice. So again, I think this is something that tells me that, you know what, it's exactly for this reason why we need decentralized financial systems and why we need crypto, so people can have some sort of freedom to transact without these sorts of random limits.
Assalamu alaikum wa rahmatullahi wa barakatuh. Hello and welcome everyone. And today we have with us Aram. Okay, I'm gonna butcher your last name. Can you tell me your last name?
My last name is pronounced as Mughalyan.
Mughalyan.
Mughalyan, yeah.
Great. Okay, and today we have with us Aram Mughalyan. Did I do that right?
Yep, that's good.
Okay, and today we have with us our special guest, Aram Mughalyan, and he is Armenian and based in and out of Southeast Asia. So he's all over the place. It's very exciting. He'll tell us more about that. Aram, a seasoned financial expert with a distinguished academic background and extensive experience in the finance sector, holds a master's degrees, or rather, Aram holds an MBA from INSEAD and a Master of Philosophy in Business Administration and Management from Cambridge Judge Business School. Aram's academic achievements reflect his dedication to excellence in finance. He's also a certified financial modeling and valuation analyst from Corporate Finance Institute. Additionally, Aram's affiliated with Antler, a global early-stage venture capital firm investing in technology companies, and is deeply rooted and involved in the startup and finance industry. Lastly, Aram serves currently as the co-founder and CEO of Solidate, where he plays a pivotal role in pioneering the development of a decentralized Web3 freelance talent marketplace. Aram, that is the official story. Tell us the unofficial story.
Well, thanks for the introduction. The unofficial story is that my life has had a few different chapters. Initially, I wanted to become a scientist. I studied physics in my undergrad, and I wanted to understand the basics of the universe, what makes things work. But then when I completed my degree, I realized back then it was very hard to find a job. And then I realized that the prospect of living and essentially working in the lab all my life isn't very interesting. So this is when I did my first pivot into the world of business. And when I started my career in the world of business again, like there were like few distinct chapters. The first one was when essentially I built a family office backed venture, family office backed vending machine business, kind of built things from scratch without knowing anything. It was a classical experience where you learn things by doing. The second experience was where I spent a lot of time in the Middle East, and I was working with a number of international brands in the power sports industry, and we became the biggest distributor outside of North America. So I helped the brand expand across the region, and I did strategy, sales, and marketing for them. And then at that point, I also realized I wanted a new challenge. Did my MBA, became a consultant, which is a very traditional path for a lot of MBA people to do. But when I was working for consulting for these multi-billion-dollar large conglomerates, I realized how not fulfilling that work was. And I thought it was a little bureaucratic, and I wanted the challenge. I wanted to work on frontier technologies, and I wanted to work in an early stage company because these companies are much more agile and they're much more innovative. This is when I moved to Asia, went to Antler, Singapore, which is like it's an early stage incubator. And then I got the funding from them. And then I started building this decentralized talent marketplace, which is essentially helping crypto companies with hiring. Now, this is just one part, right? And in parallel, I've been interested in crypto since 2017. I bought my first Bitcoin back then. And, I've been kind of following the space, but I really started deep diving in 2020 when it was COVID. I was at home, I couldn't go out. And, I was a little bored, you can say. So I kind of started just reading and learning more about what is DeFi. And we had the DeFi summer. And since then, I've been a very active participant in crypto space. I've been a content creator on LinkedIn. And the reason is that because I think, again, crypto is not really easily understood by the vast majority of people. You have a small group of great people, great builders, and they're primarily on Twitter and they're discussing great things. But most people, they don't really understand what's going on there. And for a lot of people, crypto is still this misunderstood. Some call it a scam, some call it a bubble, but they don't really understand the true value that crypto brings. So my mission has become to simplify crypto for the 99% of people, because I believe if you want to make Web3 mainstream, we have to explain the value add of Web3 without going into the nitty-gritty details of the blockchain technology. So this is the second part of me, which is I'm a Web3 content creator. And I guess you can say the third part is that I'm a long distance athlete. I'm an ultra marathoner. Again, I started running during COVID when I gained a lot of weight. I was at home sitting on my couch all the time, and I realized this lifestyle is not healthy. And I kind of just picked up this running, and then it's been going on since then. And I think a great thing is that if you are in Web3, especially in early stage company, it's a very, very volatile, lifestyle. 1 month, crypto is pumping, you're very happy. The other month, things are crashing down and you can be very sad and depressed. But when you have this discipline and when you work out, I think it brings some sort of stability to your life. And it also keeps you sane mentally and physically. So personally for me, it's one thing that really made me successfully navigate the crypto bear market of the 2022-2023. So yeah, I guess this is the short intro about me, but I'm happy to go into more details as we talk.
Yeah, that's fantastic. I never thought about the importance of being, I guess, sporty and being active as somebody in the crypto space. But I guess you're right. It really is very volatile, and you do need to have something to do to keep your kind of hormones balanced, I guess. So for me, the 2008 financial crisis was a big wake up call in that I found I suddenly understood that the financial systems that we just so blindly trusted are actually full of holes and full of avenues for people to take advantage and scam and gamble and do all kinds of things that hurt the typical average Joe on the street. And that for me was a wake up call. And I think that over the years really made me understood why crypto exists. Do you in your life have an experience where I would say the come to crypto experience where you were like, oh wow, this experience that I had with whatever the financial system or whatever really solidifies for me why crypto exists?
I can bring one very recent example from 2021. So when I went through Antler, which is an early stage accelerator, and we registered our company, we got some funding from them. The next step was to get a bank account, right? And let's be clear, if you're a legitimate business these days, getting a bank account is like a basic human right. Because if you're a business, you don't have a bank account, essentially you can't operate, you can't accept payments, you can't make payments, you can't transact international, etc. Right? So in Singapore, which is considered a crypto-friendly jurisdiction, I approached all the large banks, DBS, OCBC, UOB, also a number of small banks, and essentially every single one just rejected me, saying, "Hey, I can't give you the reason why. You can't appeal that. It's a final decision. You have zero power. We're not going to give you a bank account, and we don't care.
Wow.
It's up to you. Do whatever you got to do, right?" So, and this was like, wow. I'm a legitimate business. I'm not doing anything shady. Essentially you realize that banks don't want to deal with you. It's not that because you are doing something illegal, but because you are in the gray zone, and you probably as an early stage company are not very profitable for them, so they are better off focusing on their uh, large accounts, so they just don't care about you, right? So you're kind of left outside of the system. So what was the solution? I found a fintech app, which essentially is like a neobank, right? And they banked us, and we've been working with them for quite a long time, and I'm very happy, right? And while this neobank is a centralized entity, it just proves that they're, let's just call them like crypto friendly, right? And there's a couple of them that are accepting Web3 uh, clients. But this was just one example that as a bank, I can randomly say no to you. I don't have to provide any reason. I can do whatever I want, and there is no repercussions against me. I mean, another example could be that for whatever reason they can freeze your account. It's not very uncommon. It's not happening in Singapore, but it's happening in a lot of jurisdictions these days where banks will say, "Hey, if you use your credit card to purchase crypto from a licensed centralized exchange, I'm going to freeze that transaction. I'm not going to let you do that." And this is, I think it's absolutely crazy because it's your money. You're buying crypto, which in many jurisdictions, it's a legal thing. Let's remember Bitcoin ETF, right? It's essentially the biggest asset manager in the world. BlackRock, 10 trillion assets.
We'll be right back after the
Believe that the
break.
financial system is broken and that our banks and insurance companies do not have our best interests at heart. We've built Techaton to help us get together as a community to save, earn, and access credit. Join us today and discover how you can grow your savings while helping others.
Assets is
Yeah.
indirectly getting exposure to Bitcoin. Coinbase is acting as a custodian for them, but essentially they are allocating crypto Bitcoin to a certain percentage in the portfolio of their clients, right? But a lot of banks in other countries they're saying no, you can't even buy Bitcoin, and I think this is a violation of your like basic rights. That as a person, I want to have a diversified portfolio. I see Bitcoin crypto as a legitimate digital asset that I want to own, but banks won't let me do that, and you don't have a choice. So again, I think this is something that tells me that you know what, it's exactly for this reason why we need decentralized financial systems and why we need crypto, so people can have some sort of freedom to transact without these sorts of random limitations.
Yeah, so this is fascinating, and so there's so much to unpack in what you just said. You said that to have a bank account essentially is a basic human right.
It
You
is,
said
yeah,
for businesses, but I actually feel it today in the way our world works is a basic human right for people. And yet there is still something like, I don't know, 1 to 2 billion people unbanked in the world today. And you also mentioned, and I think you really nailed the reason why, because banks don't want to deal with these people and small businesses because we don't make a lot of money for them, right?
exactly.
And so these people are just left out there, and there's really no way you can actually dig yourself out of whatever situation you're in without these basic tools and resources. What are your
Exactly.
thoughts there?
Yeah, yeah, that's very true. Or if they say, if I'm gonna bank you, I'm gonna charge you like hefty fees, and you're like, wow, wait a second, I'm making a $10 payment, and you're charging me like half a dollar, even a $1, like 5 to 10%. It can be crazy, right? For me, as someone, let's say, who lives in Singapore, maybe I just don't care. My bank is charging me 5 SGD per month. I don't care. But someone who's making, I don't know, $200 and who lives somewhere, I don't know, somewhere in a developing country in Africa or Latin America or South Asia, this $5 can be like a 1 day's salary. So it's very important for this person, right? So again, if banks want to deal with you, they're going to charge you hefty fees, and we see this. We see this all the time, right? But another problem is that you said in a lot of developing countries, like depending on the country, like could be 40% to 60, 70% of the population is unbanked or underbanked, meaning they don't have a bank account. And the reason is that they live in remote areas, remote villages, or small cities, and it's not profitable again to open a bank branch there. And banks don't want to again deal with these people because they're not profitable customers. I think it's not a secret that 20% of banks' customers bring about 80% of their profits. And again, 80% of this large number of people, they only bring a tiny proportion of their profits. So obviously, banks want to deal only with these rich companies, rich clients, VIP clients, and they don't want to deal with this large number of people. But then you can ask, what is the solution? We need to have these people integrated into the economy. We need to get them banked in a way. We need to plug them into the global economy so they can start transacting. And I think crypto is the answer to that. And I can bring some very specific use cases of crypto that is actually doing a good job there. But yeah, I'm very much there on your point that banks are not doing a good job, and I don't think having banks is the complete answer. I want to be clear: we need banks; they're very important players, but alone they cannot cover the whole population. So we also need crypto to bridge the gap.
Yeah, very good point. Actually, I wanted to add up on the topic because you mentioned a few things that were interesting. First of all, the access to banking. I faced myself multiple time when even opening legitimate business in Europe, France in particular, where they refused me to get a bank account. Even if I had a license, I had everything, and the transaction was taking place, but they wouldn't bank me. So by law, they impose, if I remember, they impose a bank to bank me by force. Basically, they enforce it. So you receive a letter, you go with this letter, and you go to the guy who told you no 100 times, and you give it to him. Say now you have to do it, and that he does it, but he doesn't even look at you in the eyes, whatever, and that's it. So this is the some of the things. I remember also in Dubai, for example, that was the worst experience ever. You pay for your license, you pay for everything, and then you can never open a bank account, especially a startup. So it was like a nightmare, and it's still a nightmare. So you go and you have to really get some wasta to get a bank account, a friend that knows a friend. Amazing. A country that is supposed to be the country of startup, we suffered to get our bank account. Okay. And eventually, I even had at one point one bank closing down my bank account without notice.
Wow.
Literally, imagine I was receiving funds from investors, global investor, and they're like, "What is this money? Where does it come from?" And I show them this is an investors, global investors, and I show them the documents and of course the safe note, whatever. And they're like, "Okay, good." And then they had the KYC, fine. The KYC is done. They talk to my customer and my investors. Eventually, this bank, like few years later, decided to just come and grab your cash, basically.
Wow. It's
So don't bank in UAE.
Yeah.
So thanks God we moved to Saudi Arabia. Actually, it's much clearer. The banking system is actually easier. So when you set up your company, you have access to a bank account. No ask, nothing. They're very easygoing. It's up and there is it's not that easy as well. So you have to go and get some connection, or you go to any bank, and 6 weeks later you get your account, and everything is fine. But it's true. Now we go to the general population, mom and pop guys all over the world. Yeah, they don't have access. So no access to banking is no access to financial freedom, and hence the have not will always be handicapped because they have no access to liquidity. Now, I like to hear that you say now we have crypto, and it's easy to get into getting a crypto account and decentralized means and stuff like that. But issue then is that, as you mentioned, the regulator or the bank, they're like, at any given time, if you stay inside of the DeFi, you're fine. But as soon as you come out, try to cash out or something like that, you're again in trouble. So how do you cope with these things? And if you can, Sharon.
Actually, before we get there, I wanted to just touch on this point. You said, the banks, they don't really care about the poor people, and they really want to treat they want to deal with the rich people, and they want to deal with the VIP people. And I've been hearing some horror stories actually from Murad, from some people that he knows, where actually they have large sums of money and they are still trapped in the banking system because the banks don't allow them to withdraw this money. Murad, do you want to tell us some stories there?
So a few friends reach out. We were discussing investment in Saudi Arabia. and buying real estate, and also in Dubai buying real estate. So those friends, they were trying to buy property, and they had they went to their bank account in France, and the amount was there, like $100,000 sitting in a bank. The person goes and say, listen, I have a property I want to buy in Dubai. And guess what? The bankers say, well, you have to give us proof of the buying. And, the guy does it, bring him everything. And it's like, oh, we cannot wire. This is a huge amount. It will take some time, and so on and so forth. Eventually, they kind of not block his account, but they limited his account to 10,000 euro a month. So which would take like 10 months to get the 100K to buy the property. So it was something insane. The guy on the money has been working very hard and is not allowed to take his own earned money. And they limited his account. And they even tried to kind of, not block his account, but telling him, no, you know what, you cannot. So two things. Either they don't have cash in the bank to pay, or there's something else we don't know. But it's very scary, so yeah.
And the most extreme example is actually what's happening now in more developing countries. I'll take an example of Lebanon, where I think the monthly limit is like $100 or $200. It's very low, and people there. I have saved tens of thousands of dollars. All my life savings are in the bank. So essentially, you kind of you're a rich person on paper, but you can't get your money. And this is the unacceptable situation where people really worked hard, put all their money in the bank, they put all their trust in a bank, and they can't get their money. Another example is like we have this in Argentina, where again you have like 100+% inflation, so people actually they spend the money the second they get it, because next month maybe the price is double. Or we have examples like Venezuela, where the governments just have very responsible policy, and they just print too much money, and then essentially just creating hyperinflation. And I think that's one of the downsides of centralized fiat currencies, that essentially if the government is incompetent, they can print as much as they want, and then at some point it's going to create this inflation cycle and you can't escape it. And we have seen this in so many developing countries, and it's making like really people suffer. If you think about it, Venezuela is the richest oil country in the world, richest oil country, but they're one of the poorest. Venezuelan people are now like going all the way to America to claim asylum, because in their country there's not enough security, there's not enough food, there's not jobs. And this is like 100% man-made disaster because of the incompetent government in Venezuela. Simple. And this kind of things, yeah, like because in fiat currency there is no checks and balances, right? Like you have in Bitcoin. I'm sure if we could, some people probably would say, okay, let's just maintain out a 21 million Bitcoin and get rich, but then that would cause this inflation, and things would get out of control. But I think one of the beauty about Bitcoin is that not a single person can control it, and I think that's the balancing system that's contracting that's kind of like on the opposite side of where fiat is, because it's unlimited supply, and on the other hand, like you have Bitcoin, which is a limited supply. So it means that if demand for Bitcoin grows, the only way for prices to go higher. And we're seeing this now when there is institutional money, what it's kind of legalized now in the US, and institutional money is coming into Bitcoin ETFs, billions of dollars every week. Then it's causing Bitcoin price to go. And now we had a recent all-time high.
If I may. So this is something interesting here. So you have a lot of money coming from the institutions, okay? Retails, like they call it, the big guys. They're able to get access to the crypto, Bitcoin, ETF. And at the same time, as you mentioned, if you go and do a transaction on Binance and you're Mr. Nobody, your account get blocked. So is it like a game? Like they really want to keep the middle class or the average people poor, and let the big guys still sit at the table and enjoy the feast? And then if there's some crumbs, breadcrumbs coming up, and then we can go and, hey, finally you can go and buy. So I'd like to know that, because we live in a very interesting world and time. People are getting crazy to buy the things, and they have to to go and, I don't know, do peer-to-peer lending, send me a crypto. That's crazy. But if the credit card touch any of the exchange, and I'm talking about European nation, even South Asian nation, is what's going on? Is it really, wait, we're eating, we're not done yet, the big guys? When we're done, then we'll decide what you can do or not do. Is that correct? Or
I think if you look at the jurisdictions where Bitcoin ETF is legal, for example, it's been kind of legalized in US. By the way, there was a long battle and we had a couple of court cases which served as a precedent. And even this commission, which was headed by Gary Gensler, like his vote essentially was the deciding vote, and it happened under huge pressure that he has been saying it's probably not going to be approved. He was resisting this move for a long time, but it was a victory that the crypto community won, right? So first, it didn't happen overnight. But if you look in jurisdictions where Bitcoin ETFs are legal, for example, United States, Canada, etc., in these jurisdictions, there are a number of regulated and licensed exchanges. For example, in the US, the biggest exchange is Coinbase. And as a US resident, you can purchase Bitcoin without any problems. Now, the problem is happening in other countries where you are having problems where they don't want you to purchase crypto. And again, mostly it's happening in developing countries, which don't have a strong rule of law, which don't have a strong regulatory environment. So these countries don't have Bitcoin ETFs, and usually they try to limit the presence of decentralized exchanges, which makes it harder for people to purchase crypto. So in short, I think in places where large institutions can purchase Bitcoin, usually the retail investors can also purchase Bitcoin. But again, these are mostly developed countries. And in a lot of countries, just crypto is like outright illegal. Like, do you have countries where it's outright illegal, like no exchanges can operate, you can't purchase crypto, like fully legal, to places where it's kind of you can purchase, but it's hard, and a number of exchanges are not operating. So it's a bit of a mix. But I think, yeah, if institutions can purchase Bitcoin, then Bitcoin ETFs, then usually retail can also purchase it.
Yeah, I mean, this is such an important point, which is that, the developing countries are the ones kind of blocking the advent of crypto. And of course, they say it's for the protection of their country, et cetera, et cetera. But I think truly it is because they don't know how to stop people from adopting crypto over the local national currency, right? Because usually the developing countries have like you said, poor rule of law, not very good regulatory framework. They're printing, and they know that if they introduce crypto, it very well might be the next day, nobody uses their national currency anymore. As you mentioned, places like Lebanon, Turkey are experiencing such high inflation. And so I'm thinking about, the role of banks in all of this. And the thing that comes up in my newsfeed again and again, I don't know if you guys know this, but apparently it's more or less the 1 year anniversary of the collapse of Silicon Valley Bank. And it was maybe a year ago this time where there were lots of these bank runs, and then there was Credit Suisse that went away, First Republic that went away, Silicon Valley Bank that went away. And today they're saying, oh, look forward to more bank runs. And this is in the United States, by the way. So land of the Bitcoin ETF and land of so-called regulatory framework. And the reason they're saying this is because apparently interest rates haven't gone down. And so that's still causing stress in the portfolios of the banks vis-a-vis the bonds. And then on the other hand, you have this commercial real estate sector, which is tanking because most people, or not most people, but lots of people are now working from home. So all these office leases are going down. So can you kind of make things simple for people to understand? Why are there all these weaknesses in the banking system? And then how can, crypto and specifically Bitcoin and some of the blue chip cryptos be a good alternative?
All right. So I think I'll just break down and just very briefly talk about what's been happening in the banking sector in the US, right? And why we had the collapse of Silicon Valley Bank, etc. And then I'll talk about the crypto, right? So long story short, the US for a long time essentially had a zero interest rate policy, which means that money was very cheap. Money was very cheap, right? And banks, when they were buying up different assets, they were predicting that interest rates are going to stay near zero for a very long time, right? So what happened was then when suddenly in 2022, 2023, we started having this inflation, the Federal Reserve had to dramatically increase the interest rate because inflation was a 40-year high. We didn't have such USD inflation in the past 40 years. And it was getting out of control because prices were skyrocketing in the US, etc. And I think that was the right move. But what happened was that when you jack up the interest prices so much, right, what's really going to happen is the value of a lot of debt securities, it's dropping dramatically, right? And that is affecting the balance sheet of the banks, and that can potentially affect their liquidity. Now, I don't want to again become here too technical, but essentially, in case of the Silicon Valley Bank, there was this fear that the bank might be insolvent, and we have this thing called bank run, and essentially all the banks in the world, they operate on a fractional reserve banking, which means that at any point of time, if 100% of customers go and say, can you give me my deposits back? They don't have all these deposits in hand. They can only satisfy a short fraction of this depositor. So when people started withdrawing money after a couple of days, essentially they just ran out of money, and the government had to step in and bail them out. Otherwise, it would create this cascading effect, and other banks would be in jeopardy, right? So I think this is one of the biggest weaknesses of centralized banks. But again, having said that, I still think that centralized banks have an important factor. And one reason is that they can do lending, and it's very important to say they lend, and this lending plays a very important role in the growth of the GDP of the country. And quite often, this lending is not based on collateral. For example, in crypto, we don't have this thing where you can borrow money from a protocol without any collateral. You have to, I don't know, put some Ethereum, you can borrow stablecoin, you put some stablecoin, you borrow some crypto. And usually, even the amount you borrow is not like 100%, it's usually 70%, 80%, right? So you borrow less than what you put in as a collateral, and that's the safety measure. So that's why DeFi works pretty much fine. It doesn't collapse, you get liquidated, but the system doesn't collapse. But in centralized world, banks don't have this collateral, right? So when you give out too many loans and then, for example, people can't pay it back, the government might need to step in and bail them out. Now, I think the modern economy pretty much would be impossible without these banks and without these loans, because for a lot of businesses, it's a lifeline. A lot of people can't imagine their lives without credit cards. But the reason we're having this collapses is because due to just poor risk management, I guess. Banks get comfortable. They think, okay, interest rates are near zero. They will continue being like this, but things change. And then suddenly that's affecting how their customers perceive these banks, how trustworthy, how solvent they are. And that might cause a bank run. I think this problem will never go away. We will have it to some degree. It's more like the governments and banks have to manage better. They have to regulate the banks better. And these problems will never go away. And it's one of the biggest also weaknesses of centralized banks. So it's like we need centralized banks, but they also have this weakness, and we can't really deal with it because we don't have a better solution. I don't know if in crypto we'll have something which is called reputation-based lending. For example, you don't know who that, or you may even know who is behind that wallet, and you can just give crypto to this wallet without any collateral. So if this wallet defaults, essentially you take the risk. I haven't really seen this in crypto. It's a very interesting area, but I also understand it's very hard to implement. And I think this is one of the major areas where centralized banks still provide a value to people that crypto can't provide. So that's why I'm saying we need banks and we need crypto.
This is so fascinating because you made such a good point. You said, well, in DeFi, there's no lending without a collateral. And in centralized banking, fiat banking, essentially most of the lending takes place without collateral. And I believe that they do so because their interest is not really the loan or to make it easy for people to borrow money, but they actually want to inflate their balance sheets and print more money. Essentially, they're like the way that a bank grows its assets and the way that it grows as a business is by making loans, and then its balance sheets increase because the loans count as assets, ironically, on their balance sheet, and suddenly they're a bigger bank. And so, like the most aggressive growth banks are the ones who make the most loans. And so they do this without a collateral, and obviously, it's going to blow up at some point. And in DeFi, you don't do this. So you have to have collateral. So then the complaint there is that, well, if you require people to have a collateral, you're making it hard on them to borrow. And therefore, you're making it hard for the economy, the DeFi economy, to grow. But I think that is not a bad thing. We need to have a little bit of restraint. Otherwise, you're going to have these boom and bust that the fiat system has all the time. I'm actually going to ask Murad this question because I was also thinking about one thing you said about El Salvador, which is El Salvador, they introduced Bitcoin as a currency, and they've been getting a lot of flack. And I believe Murad posted an article about El Salvador lately, and he got kind of a bit of hate comments. Do you want to tell us that story, Murad?
We'll be right back after the break.
Introducing TechAssure, the life insurance fund that is owned by the very people it insures. You share in the profits from insurance operations and take care of your family even after you're gone.
Tell us that story, Murad.
Yeah. Before I go into the El Salvador story post that I posted on LinkedIn, something interesting. I had a discussion with a friend, and they were like, "We don't see any future for DeFi because the whole game is lending, and the lending doesn't happen on DeFi." So they were like big economists, big guys who are working for big, company, and they're like true believer into the lending mechanism. And they're like, if Bitcoin can have this mechanism of being, a value where we can create fake money, which is not happening on Bitcoin, or fake, things, then we're in business with you guys, So they're going against the Bitcoin, the maximalist and stuff like that, saying this has no future because the world as it lives today needs lending, which is not true. The world needs actually real asset, real transaction, real partnership. Okay, not based on interest. Okay, that's a parenthesis, and maybe we can do that. And that the good thing about DeFi, as you were mentioning, at one point, let's say I have a flock of animals like sheep. Okay, I have real decentralized asset that can tokenize my flock, my sheep. I can actually have real asset backing me up on DeFi, or I'm poor in cash, but I live in Pakistan and I have lands. The land can be collateralized, and that's where games change in DeFi, and you can make people from poor income or poor revenue becoming quote unquote marketable or bankable, or through this. Anyway, going to El Salvador story, I think I just posted the good news that Salvador is doing well, and not only well, they even got the visit of the Emir of Qatar actually visited them, and kind of was looking at the success story, quote unquote, of how El Salvador positioned themselves with Bitcoin and allowing Bitcoin to be one of the currency to be traded locally into the market. And of course, we all know the story. I mean, that El Salvador will be able to pay the IMF debt with the success of this move that the president made. Okay, as unpopular it could be, he has been reelected in an interesting way, but at the same time, crime has kind of reduced because of the fact that people now have more cash. They are able to, send money in a cheaper way. So there's less violence happening. The country is doing better. Like I said, they pay back their debt, which is the big deal. They debt from IMF, and IMF was like, take the money, and they say, no, we don't want to take your money. We want to pay back our debt. And you see all these people looking at like on my post saying, what's going on? This is like gambling with the nation. I mean, you had nothing to gamble with. The country was a mess. and then he just pivoted using this type of currency, and people are just criticizing, and now the Bitcoin is at 75,000 and plus. He made a good return. At the time they were criticizing because the Bitcoin was going down. I mean, they're not realistic. I mean, what do they want from the guy? The guy is the only one who made a move, and the move has been successful. Like I said, why can't people look for the fact and admit that, hey, he did a bet, calculated bet, but he turned his country around. You know what you have to say on that, and I'm happy to.
Yeah, it's a very good example, right? Because El Salvador traditionally has been one of these Central American, Latin American countries which have been plagued in political instability, violence, gang crimes, inflation, etc. Right, and it seems to be one of the countries that is sort of stabilizing. The crime level is kind of going down, economy stabilizing, and and their financial system seems to be in a better shape than many countries which were in a similar position years ago, right? So I'm saying we still have time to see how things are going to work out in the 10 years time, but so far I'm cautiously optimistic on that because the policies they put in place, it seems to be working. Another interesting thing about their economy is that also it's not just Bitcoin. Bitcoin is one of the several official legal tenders. You can also use US dollars, for example, which makes things easy, right? You can use Bitcoin. I think even they even have their local currency, El Salvadorian peso. So again, like a lot of countries, a lot of regulators think it has to be this or that, either or, but why can't we have both? So like it's a new mindset that I think El Salvador is trying to it's essentially an ongoing experiment, and I love this kind of experiments because if this works out well in the long run, I think a lot of other countries are likely going to follow uh, their example. And it was a brave move. It was a brave move in 2021, and I know it received a lot of criticism in 2022 when because even the country was purchasing Bitcoin, right, and then the value of the Bitcoin tanked, and there was a lot of criticism that it's going implode, etc. But now they're already in the green now, and now their investments are profitable and they're growing in value. So again, I think you shouldn't judge experiment too quickly. You should just give some time, let it work out, see how things are going. And so far, like a few years on, seems like Bukele's bet is sort of paying off and his country is on the right path. Again, I think it's still early to say for one with 100% certainty that yes, it was a good thing, everybody should do it, but I'm cautiously optimistic, and I would expect other countries in developing regions in Africa, South Asia, Latin America to follow El Salvador's example.
There's actually a lot of mining happening. So El Salvador made a move by buying and allowing, like you say, multiple currency to be floating into the economy. But what is interesting is that not everybody is mentioning that, but that Nepal is mining Bitcoin, with the energy. You have Oman who's doing that, has been doing that for the longest time, and then they just open up last year and say, "Hey, we are mining." So there's a lot of mining Bitcoin process happening at the government level, all over the world without being mentioned.
Hmm.
So again, is a question of like the gold reserve define the country wealth, and now we have this race against Bitcoin holding that will define again the other gold rush for nations. Okay, that's parenthesis.
Exactly. That's a very good point. And the good reason about that is that if you look at where Bitcoin was mined traditionally, it was in China. Then China outlawed Bitcoin. So all these mining operations, they moved. They're primarily US based now. And if you have all these mining operations in one country, it still poses some centralization risks. So when I see these kind of examples that other countries also set up their mining operations or governments encourage that, I see it's a good move. It's going to decentralize the pool of miners. And of course, again, these countries traditionally would be buying gold and storing in their central bank vaults, but now they may also have Bitcoin as a digital gold. And I think we haven't seen it yet, but again, it's my prediction that in the years to come, you're going to see central banks storing Bitcoin as one of the uh, as an alternative to gold. Again, we don't have to completely replace gold, but I think you can have some gold, you can have some other currencies, for example, you can have some US treasuries, and you can have some crypto. So it doesn't have to be all these traditional assets like gold.
Yeah. Thank you so much for that. So I'm going to pivot a little bit now. And, there is this, generally speaking, when we talk about Web3, we talk about blockchain, it's very much tied to financial instruments, DeFi, etc. But I think there's a lot of other use cases, and you are building a specific use case in that you're building a talent marketplace on the Web3. Can you tell us a little bit more about your business and why did you pick this particular problem to solve on the Web3, and how is the Web3 an advantage in solving this problem?
Right, right. So again, what I'm doing is one example of a DAO, which is a decentralized autonomous organization. And the whole idea is that we have been running corporations and companies in a very centralized manner. You had a CEO, you had different levels of VPs, and then a lot of managers, etc. And then you had the frontline employees, right? And essentially, it was a very top-down. One person decides what's happening in the whole organization. So the new narrative is that in crypto, what if we can give more power to the community and we can have community-led organizations? And the reasoning is that we can not only achieve better decision making if we really kind of go out and as community, we have better representation at the governance body of the DAO, but we can also let every community member have some sort of ownership of the project. Because if you have, let's say, a fixed number of tokens and then you just give some tokens to your community members for their contributions, essentially everybody is going to be a partial owner of this organization. So this is the whole premise, right? In our case, it's a decentralized marketplace, and the idea is that you have centralized marketplaces, for example, like Upwork, which is a freelancing marketplace. It's a public company now, but the people, freelancers who work on that platform, they have zero ownership, pretty much. You can go and buy the stock online on an exchange, but you have to do it at your expense. But the idea is that what if you, as a freelancer, make a contribution to the platform? We can give you tokens, which will give you some governance power and decision making and say how this platform is run. Because these days, you have a company which is owned by the public largely, it's usually investors. And then you have freelancers, and their interests are at a conflict. Investors say, I want to get more return. Let's increase the fees on the platform so we can make more money. But the freelancers on the platform say, hey, I'm working really hard. Why are you increasing the fees? If you increase the fees, I'm going to try to kind of jump off the platform and work directly with the employer outside of the platform, right? So again, it's a conflict of interest. Freelancers want low fees. Their investors want more profits, higher share price, higher earnings per share. So they want to increase the fees. So there's a conflict of interest. And the whole idea of a DAO is that what if investors can hold the same token as the community members and as the founders, right? So investors can also actually invest in the same token. So if the token is doing well, if the price is increasing, everybody's happy. Community members are happy, founders are happy, investors are happy. And I think, again, traditionally it's been either you make community members happy or you make investors happy. But I think there's a way where you can make all happy. So I think the whole idea of Web3 and blockchain is it allows also for more inclusivity, that we can put everybody in the same boat and everybody can be happy. So it's a win-win for everyone.
I really like that vision. And I think the key unlock here with crypto and Web3 is really ownership and the distribution of ownership. And we have, for our product, a very, very similar vision, which is that, you should be part owner of the protocol that you're using, because you're contributing to the growth of, let's say, Techaton or Techasure or our products. Therefore, you should also benefit from its growth as an owner. And so I'm 100% with you. And I do see that this ownership structure can be applied to so many things and pretty much everything in our economy across the board, because it does incentivize it. It does incentivize, and it does make it levels the playing field, and it actually makes everything better. So thank you very much for sharing that. Now, this is the last part of our podcast. I have to ask you these quick fire questions. So I want
Sure.
you to answer them in less than one sentence. So like maximum one sentence, you need to answer the following questions. All right. Number one, if you had to describe traditional banking in one word, what would it be and why?
Slow and high fees because they're legacy institutions.
If you had to describe crypto in one word, what would it be and why?
Decentralized and permissionless because it gives freedom back to the people.
Amazing. Satoshi Nakamoto invites you to a dinner party. What is your first question for him or them
Oh.
or her?
I would ask, would he or they expect Bitcoin to be this big in 14 years or not?
Good question. Ethereum, do you see it as a way to improve finances or a risky bet?
I think Ethereum it's a decentralized computer which can improve finances via its flourishing DeFi ecosystem.
Last question. What is the all-time high you think Bitcoin will reach after the halving?
Well, the question is when. I have been seeing different reports. I think it can go in the next 5 years into six-figure range. I don't want to give any estimates because, again, I don't know if there's anyone who's saying they know they probably shouldn't be taken seriously, but it'll go into six-figure range in the next 1 to 5 years. But again, it's hard to make really predictions. So I don't like making predictions, but it will definitely grow. It's not going to stop here.
Amazing. Amazing. Thank you so much, Aram. The last word for you, if somebody wants to learn more about your company or wants to talk to you about partnership, how should they reach you?
Yeah, I think the best place is to find me on LinkedIn. I have 40K plus followers. I'm creating content there daily, so my messages are open. If anybody's interested, they can find me on LinkedIn. It's Aram Mughalyan. I'm very active there and very responsive, so let them hit me up on LinkedIn.
If you don't find him on LinkedIn, he's in between Asia and Armenia. And I'm sure that if you guys want to visit Armenia, it's also a very beautiful country to visit. I heard a lot of good things about, it's not too hot, it's not too cold, and it's a place to close. And we are very close to from Riyadh. Actually, it's a very short escape for the people from Riyadh who want to visit the place. So thank you so much, Aram, for your time, and looking forward to further discussion.
Okay, thanks.
Yeah, thank you so much. Thank you so much for coming on the show. So